Good day Forex trader. Your USD Forex signal, bearish flag forms on daily chart. There is a likelihood that the pair will break out lower in the coming days as investors anticipate a divergence between the Fed and the ECB. Bearish view. Sell the EUR/USD and set a take profit at 1.1250. Add a stop loss at 1.1430. Timeline, 3 days. Bullish view. Set a buy stop at 1.1390 and a take profit at 1.1450. Add a stop loss at 1.1300. The EUR/USD pair tilted higher on Friday as investors reflected on the latest American jobs numbers. The pair is trading at 1.1360, which was higher than last week's low of 1.1280. US NFP data. The U.S. labor market is going through a strong transition as the economy reopens from the COVID-19 pandemic. Data published last week sent a mixed situation about the labor market. On Tuesday, data by the Bureau of Labor Statistics, BLS, showed that there were over 10 million job vacancies in the United States. At the same time, the Great Resignation continued as more than 4 million people left the job market. On Wednesday, data by ADP revealed that the country's private sector added over 800,000 jobs in December. That was about 300,000 more than what it added in the previous month. Further, on Thursday, official numbers revealed that the country's initial jobless claims are hovering at about 200,000. Finally, on Friday, the BLS said that the job market slowed in December as the economy added less than 200,000 jobs in December. This figure was substantially lower than the 422,000 that analysts were expecting. However, the closely watched unemployment rate figure declined to a pandemic-era low of 3.9% in December. It has declined consistently in the past few straight months. Another impressive number was on wages, which analysts were watching closely. Average hourly earnings rose by 0.6% from November, leading to an annual increase of 4.7%. Therefore, despite the disappointing headline figure, analysts believe that the Federal Reserve will continue to tighten market conditions this year. It will achieve that by ending its quantitative easing policies and then hiking interest rates. Analysts at banks like Barclays believe that the Fed will hike in March this year. Your USD forecast. Turning to the daily chart, we see that the EUR/USD pair has been in a tight range in the past few months. As a result, the pair has moved between the 25-day and 50-day exponential moving averages. A closer look shows that the chart has formed a bearish flag pattern that is shown in yellow. The price is currently slightly below the upper side of the flag pattern. Therefore, there is a likelihood that the pair will break out lower in the coming days as investors anticipate a divergence between the Fed and the ECB. Gbp Usd Forex signal, path of least resistance is higher. The pair will likely keep rising as bulls target the key resistance at 1.3700. Bullish view. Buy the Gbp Usd pair and add a take profit at 1.3700. Add a stop loss at 1.3500. Timeline, 1 to 2 days. Bearish view. Add a sell stop at 1.3560 and a take profit at 1.3500. Add a stop loss at 1.3650. The Gbp Usd pair jumped to the highest level since November after the mixed jobs numbers from the United States. It is trading at 1.3590, which is about 3.3% above its lowest level in December last year. Fed and BO convergence. The Gbp Usd pair rose as investors reacted to the mixed U.S. jobs numbers. Data by the American government revealed that the economy added about 199,000 jobs in December. This was significantly lower than the median estimate of about 420,000 jobs. Also, the figure was substantially lower than the estimate of 800,000 jobs by ADP. While the headline figure was weak, economists saw some strong signs that the labor market was indeed doing well. For example, the unemployment rate declined to 3.9% in December. This was the lowest level since the pandemic started. If the trend continues, it means that the rate will move to its pre-pandemic level in the fourth quarter of this year. Another positive thing in the report was that wages are also rising. Overall wages jumped to 0.6% in December, leading to an annualized increase of 4.7%. Therefore, with inflation being at record highs, the wage number was the most closely watched. Meanwhile, the UK economy is doing well even as the Omicron spreads. On Friday, data by Halifax showed that home prices rose by 9.8% in 2021. This was the best annual increase since 2007. It meant that an average home price rose to a record high of £276,090 in December. That was about £24,000 over a year. Therefore, analysts see a convergence between the Federal Reserve and the Bank of England, BO. In December, the BO became one of the first banks to hike rates. Now, analysts expect that it will implement a few hikes this year. The Fed will also hike about 3 times starting from March. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has been in a strong bullish trend in the past few weeks. The pair has managed to move slightly above the 61.8% Fibonacci retracement levels. It has also risen above the 25-day and 50-day moving averages. Also, it has moved above the ascending trend line that is shown in yellow. The stochastic oscillator has moved close to the overbought level. Therefore, the pair will likely keep rising as bulls target the key resistance at 1.3700. Aud USD Forex signal, pullback to 0.7100 likely. The pair will likely resume the downward trend as bears target the key support level at 0.7100. Bearish view. Set a sell stop at 0.7160 and a take profit at 0.7100. Add a stop loss at 0.7240. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7210 and a take profit at 0.7300. Add a stop loss at 0.7150. The AUD-USD pair moved in a tight range on Monday morning as investors assessed the impact of the American jobs data on the Fed policy. Also, the market is watching the impact of the rising number of COVID-19 cases in the US and Australia. Fed and RBA policies. The Federal Reserve and Reserve Bank of Australia, RBA, have moved relatively in sync in the past few months. The two central banks are still implementing quantitative easing, QE, policies in a bid to support their respective economies. Unlike the Bank of England, BO, and the Reserve Bank of New Zealand, RBNZ, the two banks have not yet started hiking interest rates. This trend could change this year even as the two countries see a sharp increase in the number of COVID cases. In the US, the number of new cases on Sunday was over 600,000 while more than 1,200 people died. In Australia, the number of daily cases has jumped to over 70,000. However, on the positive side, the mortality rate is significantly low considering that the Omicron variant is a bit mild. The AUD-USD is in a tight range also as investors assess the latest US jobs numbers. On Friday, official numbers from the American government showed that the economy added just 199,000 jobs in December last year. That figure was significantly lower than the median estimate of 422,000. While the headline figure was weak, economists welcomed the positive sides of the data. For example, the unemployment rate, which the Fed pays a close attention to, declined to a pandemic-era low of 3.9%. The figure has consistently declined after it peaked at 14.5% in 2020. Wages also rose by 0.6% in December. Therefore, analysts believe that the RBA and the Federal Reserve will maintain a hawkish tone this year. AUD-USD Forecast. The 4-hour chart shows that the AUD-USD strong rally found a strong resistance at the 0.7275 level. This price was also along the 50% Fibonacci retracement level. It is now slightly below the 25-day and 50-day moving averages, while the stochastic oscillator has moved slightly above the oversold level of 19. Therefore, the pair will likely resume the downward trend as bears target the key support level at 0.7100. This view will be invalidated if the price manages to move above the key resistance at 0.7275.